Hi, this is Roger Balser of Balser Wealth Management. Welcome to our 2-Minute Tuesday for May 6th of 2014. As we move towards summer, we are once again reminded of the familiar adage, sell in May and go away. This saying, while strange, has an impressive track record in terms of consistency and longevity. Today I want to take a look at this saying. We're now entering what is considered the weak 6 months of the year for the markets, from May through the end of October. The seasonally strong period is from November to the end of April. Years ago, I began using the Stock Trader's Almanac as a reference tool. For years, this book has been a fantastic source of information on the stock market. The premise of their stock market seasonality study is that, historically speaking, the market performs better from November through May. And in May, it could be a good idea to close up shop and go away until the end of October. Consider this. If you were to invest $10,000 in the Dow Jones Industrial Average on May 1st and sell it on October 31st every year since 1950, you have lost money over the last 64 years. Put another way, the entire growth of the Dow Jones Industrial Average has effectively come in the good 6 months of the year. In May of 1950, had you invested $10,000 in the seasonally weak time frame of only May through October, your initial investment today would be worth $9,313, a loss of over $681. Conversely, had you only invested in the seasonally strong period from November through April each year since 1950, your initial $10,000 would have grown to over $816,000, an average gain of 7.62%. This slide that you're looking at here shows that from November through April, we have had a very good return of about 6.7. What's it going to be from May through October? Your guess is as good as mine. Investors have been able to get fully invested type returns while only being invested 50% of the time, leaving the other 50% of the year to be invested in risk-free, yield-bearing vehicles to enhance returns further if one chooses. Now, along the way, there have been down periods in the seasonally strong periods and up periods in the seasonally weak stretch. But what I'm referring to is simply a historical tendency. This strategy has a strong historical bias of closing up shop in May and coming back and reopening in October. But it's not an end-all be-all for investing. For now, we continue to see the U.S. market in a positive trend, and we will stay fully invested even during this potentially weak period in the markets. Remember that any of the securities mentioned in this video are not a recommendation to buy or sell, and they also do not represent specific recommendations of Balser Wealth Management. If you are relying on a video for investment advice, you're making a big mistake. You should consult with your investment advisor before you make a decision to buy or sell any investment. And if you do not have an investment advisor, I encourage you to contact Balser Wealth Management at 440-934-3114 or through our website at www.balserwealth.com. This is Roger Balser signing off. Make it a great week.